that the only real evidence of a recovery has to do with consumers spending money, government spending money, higher retail sales, higher GDP numbers that result from increased spending. But spending borrowed money, as I said many times, does not indicate that the economy is recovering. I mean, look at the anemic job numbers. You know, last week we got far fewer non-farm factory payrolls were created. Yesterday we found out that during the first week of 2011, we had 440,000 people filing first-time unemployment benefits. That was a 30,000 claim jump on the prior week, much more than had been anticipated. 2010 was a record year for foreclosures, and that's despite the fact that we had a huge drop-off in foreclosures late in 2010 as a result of that robo-signing scandal and the moratoriums that many of the banks placed on foreclosures. It would have been a much bigger record had it not been for that. You know, thinking about the U.S. economy recovery, the only reason that it appears that we're recovering is that we're spending. And the only reason we keep spending is, one, because we keep borrowing, and two, because interest rates are still very, very low. Even though they've risen somewhat over the long term, the Fed still has interest rates anchored at zero. So in other words, the economy is on artificial life support. You know, think about it this way. What if you checked into a hospital for an operation, and then the following morning you woke up and you asked the doctor how you were, and the doctor said, well, you're recovering very well. And you look around and you notice that you're hooked up to all sorts of machines. There's a machine that's running your heart. There's another machine that's running your lungs. You're eating intravenously through tubes. And then you ask the doctor, Doc, what happens if you disconnect all these machines and pull all these plugs? And the doctor says, oh, but then you'll die. Well, I wouldn't exactly get excited about a recovery that was dependent on being, connected to all these artificial life support. Well, the U.S. economy is on artificial life support right now. And it's my feeling that the plugs are going to start to be pulled, particularly by the Asian economies that are sustaining these low rates. I mean, we are getting all this information about inflation. Now, today, in the U.S., we got our CPI. And for all of 2010, according to the government, consumer prices were only up by 1.5% for the whole year. And the core rate, which of course is meaningless, but the government puts more emphasis on that, was up 0.8%, which I think was the smallest annual increase since 1958, I guess, when they began keeping track of these statistics. But if you look beneath the surface, if you take the second half of 2010 and annualize the rates there, CPI was increasing at a 3% rate. So clearly inflation is getting worse. I believe that even the government CPI for all of 2011 will come up with an annual increase well north of 3%. But meanwhile, the rest of the world, particularly in Asia, they have inflation rates north of 5% and higher, and particularly when you're looking at food prices, which are not, right now, food prices are at a record high. The United Nations is warning about food riots, but food prices are increasing by better than a 10% annual rate. Now, it makes no sense that the countries that have stronger currencies than ours, that have higher interest rates, that are producing all the stuff that we consume, that they would have higher inflation than we do. So part of it has to do with the integrity of the numbers, but a lot of it has to do with people permission to buy Facebook when the valuation was $104 billion. The reason companies like Facebook can't go public earlier on is because it's too expensive thanks to the government. Now all the opportunities belong to the venture capitalists, the private equity guys. They get in on the ground floor. The government has made it impossible for small investors to buy. They're now the exit strategy.
Well,
they're how everybody else cashes in.
Groupon was only 3 years old when it went public, and that tanked too.
Well, they also bring public companies that have massive valuations that don't even need capital. You see, small companies that actually need capital to grow, they can't afford to go public. It's only these monster companies that can have sky-high valuations that the investment banks can afford to take public. But now it's just a casino, and by the time the small investor gets a shot,
there's far more downside risk than upside potential. No,
there was no bigger
casino
casino than the dot-com bubble when you had companies with no earnings going public, and you had these massive stock pops, just like the Globe.com did.
Yeah.
So what you're asking for is what we've already lived through, which was a nightmare.
No, we should have learned our lesson. Remember, I was a real-time critic of Wall Street screwing over their customers by bringing those dot-coms public. But we overreacted. All the legislation that we wrote after the fact, we closed the door after the horses had left the barn, and now good companies can't get capital at an early stage because of what the government did. No, I actually went over this. I got a new book, The Real Crash, just coming out today. I've got a chapter on overregulation in the financial sector, how it backfires, how the government tries to protect the small investor, and now because of all the regulation, the small investor is the one that's holding the bad. And the 1% get richer because the government won't let the 99% make good investments.
Facebook could have gone public a lot earlier than it decided to, Peter. You will admit that.
Well, that was, look, it's not all about Facebook, but the reason they didn't want to do that is because they knew that Wall Street could manufacture this big pop. But, you know, at the end of the day, if this stock really tanks, Zuckerberg didn't really sell a lot of stock. He sold enough stock just to pay his taxes.
Right.
Maybe if he would have sold a smaller percentage of the public, of his company to the public at a better deal than what he got from those VCs, you know, maybe he would end up with a lot more money. He could end up, it could all be on paper. All this wealth could vanish. I mean, sure, Zuckerberg cashed out with a few $100 million, but maybe had he gone public sooner with less fanfare and he sold less of his company to real investors at a better deal instead of the VCs who wanted to flip it in the eye.
Coming, well, it's in progress, that's for sure. Are you saying we get a crash, that this is 2008 all over again?
Unfortunately, Stuart, it's going to be worse than 2008. That wasn't the real crash. I think the real crash is still coming. You know, before I was on, I overheard your discussions about quantitative easing, and yeah, QE3 is coming. I was predicting QE3 when the Fed did QE2. And the reason I knew QE3 was coming is because I knew QE2 wouldn't work. And that's why QE4 is going to follow QE3. It never works. It just makes the economy sicker. The reason we're so screwed up is because all this QE is toxic.
Does it kick the can down the road? So what I mean by that is, if the Europeans print euros and America prints dollars, does that just delay the crash that you're talking about?
Well, it makes things worse, and I don't doubt that we're going to try to pressure Germany into printing. It's kind of like we're the kid that's trying to get a friend to ditch school with us to go to the beach. I mean, we're a bad influence on everybody, but it's much better to allow an economy to restructure. It's like if you're sick, you want to cure the disease. You don't want to numb the pain on Novocaine while the disease gets worse. And in America, the problem is interest rates are too low. They have to go up. We can't have an economy with interest rates at zero. We need to have an interest rate that reflects true supply and demand of savings and borrowing. We need a market rate of interest. And until we do that, we're going to have this phony economy that is held together by Fed stimulus. But it can't do it forever. Eventually, we overdose on it. The dollar collapses. We have runaway inflation. And that's much worse than the pain associated with allowing the economy to restructure. But if the Fed lets interest rates go up, we have to realize we're going to have a deeper recession. We have to realize banks are going to fail and the government's going to have to slash spending.
I hear what you're saying, but I'm wondering, why hasn't the price of gold gone up very recently?
It has.
Yeah. Well, it went up to a log, $1,800, then come back down to $1,500. That's not exactly a spike at the precise moment when you've got people considering printing trillions of euros and trillions of dollars. Why isn't it up more?
Well, look, you know, when I first started coming on Fox, gold was around 400, so it's been going up. It hasn't skyrocketed in the last year, but that doesn't mean that it won't. I think there are a lot of people that don't understand what's going on. Look at how many people are buying the dollar. Look at people buying treasuries. That makes no sense either. Look, people were lining up to buy Facebook, and they quickly discovered that they didn't want that either. I think, you know, the dollar is going to end up being the Facebook of safe havens. I think people that are selling gold are making a mistake. My clients are still buying it. I haven't sold any of my gold, and I think it's going a lot higher. I think that eventually people are going to realize that gold isn't a risk asset. It is the safe haven.